Welcome to On Cloud, the podcast for cloud professionals, where we break down the state of cloud computing today and how you can unleash the power of cloud for your enterprise. Now, here's your host, David Linthicum.
Welcome back to the On Cloud podcast. Today on the show, I'm joined by Richard Harmon, Global Head of Financial Services at Red Hat. How you doing, Richard?
Very good, David, and thanks for having me on your show.
No, it's our pleasure. I'm looking forward to this because, as the audience knows, I love podcast recording where I get to learn about things that I may not know as much about that I would like to know more about. So what does the Global Head of Financial Services do at Red Hat?
So, what we're trying to accomplish is to make sure that globally we help as many of our customers as we can to modernize their applications and their infrastructure and platforms. But our goal really is not only just technology, because we're the largest open source company and part of the IBM world as well now. And our goal really is also to ensure that technology not just makes our customers more successful, but also their customers are getting completely new and innovative capabilities that they don't have today. So it's really, the gamut of financial services, which is from banking, to capital markets, to wealth management, hedge funds, insurance, exchanges. And we also cover extensively most of the central banks globally as well. So the regulatory side, as we all know in financial services, is a key aspect of what you can do as part of the industry. And also the industry overall also informs the regulators about new things that are coming and new innovations that are coming.
So like in the last 5 years, what's changed in terms of regulatory issues that financial institutions need to be aware of and also need to build into their technology?
Well, obviously, the biggest change is probably the whole movement toward the cloud, and regulators are also moving toward the cloud, just as financial service institutions are. So I'd say, from a big picture perspective, at least from a IT infrastructure perspective, that's probably the biggest change. And I think what the regulators are starting to become very sophisticated and appreciate is, when you move into a sort of hybrid multi-cloud environment. And when I mean multi-cloud, there's, you have Amazon, Microsoft Azure, and there are many other cloud providers in different regions and different countries. But in that public cloud layer, you also then have private clouds that individual institutions run their own technology for. And eventually we'll have an intermediate layer, which will be sovereign clouds, which are clouds that are specific to a country or a region. And it protects the data and what information is allowed to leave the country. And so what I'm trying to highlight here is that complexity. Think of it as a three-dimensional chessboard that makes it very, very complex. And if you have unique systems in each of those clouds, and each cloud has some nuances that are very different because every cloud has strengths above others in certain ways and certain technologies, well, then you've sort of potentially exponentially increased the amount of complexity that you have to manage. And so one of the challenges the regulators are concerned about is, that enhanced complexity, while it drives innovation, it drives automation, it drives hopefully cost savings, but it comes with it is potentially a higher complexity.
Yeah, and it seems like with more complexity, we have security issues that also pop up because even if the security is very sound, if you're increasing complexity, you have more attack vectors, all these things to deal with, the ability to distribute data, the ability to lock down data. Some data in some countries can't be transmitted out of that country and it has to be exposed and handled in a particular way. So it just seems like it's not only the complexity of the deployments, the ability to leverage multi-cloud, private cloud, enterprise systems are still there. It's part of the architecture. But really, the complexity of dealing with the components and the moving parts within the FSI, financial services industry, because they're so heavily regulated. What are your thoughts on that?
Yeah, and I completely agree with you. You're spot on, and the last 10 years we've been on a digital transformation mode, and we're still on that mode. It'll probably never end. But what digital transformation, particularly coming out of the COVID period, now everything is moving also into real time. And when things are in real time, that means you need to have most systems heavily automated. So you don't have human interventions. And you also have to have, a very sophisticated set of capabilities to ensure resiliency, especially when you get to things like payments or clearing systems or, trading systems. And I think the overall sort of challenge of that is the ability of not just technology, but also people, in terms of adapting to a different environment, a different way of doing work, a different way of building applications, a different way of storing data. And then any institution that is, multi-country or global, they will have, as you highlighted, every regulator in each country will have some nuances that are unique. What data can be stored where, what data can be removed, what data has to be extremely highly protected, confidential data on the customers. And so that complexity, is multi-layered and multifaceted. So IT helps in that. It helps in terms of automation. And the more things that we can automate from a IT perspective, the more resilient those systems are. And the easier it is to move things, to adapt, to do other things. But I'm not trying to scare people, but my point is that this complexity, really requires institutions to look at a phased approach as they move into these new environments.
Yeah, I can see where things are just getting hugely complicated. So if we're dealing with cloud-based systems, we're outsourcing some of the stuff to a public cloud-based system, and normally it's several public cloud-based systems. Yeah. And also different intermediaries. We may use colos, and we have some edge computing stuff. And, certainly in the banking industry, IoT is a big thing. You have to deal with the network of ATMs and all these sorts of things. The ability to kind of manage risk internally with things that you own and control is one thing, but the ability to manage third-party risk is kind of a dimension that's fairly new, I think, to FSI. What are your thoughts?
Yeah, no, I agree. And so different countries are at different, say, stages of maturity in terms of looking at that. Third-party risk management has been part of the regulatory or supervisory elements for regulators for, at least the last decade or longer. But with the digital transformation, everything moving into this sort of hybrid multi-cloud environment, now the regulators are starting to realize that there's this complexity creates potentially more risk. And the way I see it, and this is the way I think everyone in the financial services industry sees it, is there's sort of two facets of this. One is around concerned about cloud concentration risk from an institution perspective. So whether that a single institution might have applications and they put all of their applications as they're modernizing those applications, potentially moving most of them into the public cloud. If they build something native in one cloud that prevents them from moving into another platform or another cloud, then there's an element of lock-in there. Now, the advantage of doing that, obviously, is you take advantage of some unique capabilities that cloud provider has or that platform. But that lock-in effect is problematic because if the institution has to be, let's say it's required by the regulator, decides to move to another cloud provider, another platform, it then will have to effectively redevelop some aspects of those applications. And that doesn't happen overnight. That can take, months, if not many quarters, and in some cases even a year. And so the regulator is concerned about sort of institutional concentration risk in terms of lock-in. But from a real regulatory perspective, they have a more global or sort of market view, and they're concerned about systemic risk. So this is not about any single institution deciding to be on one or two or whatever number of cloud providers. It's about several institutions having some mission critical application in the exact same sort of cloud environment or platform. And what that means is that if there is an event or some aspect, and in many cases people fear, particularly around regulators, around cybersecurity type attacks. And this is not just hackers and criminals, but it's also nation state actors, as we've seen over the last 2 or 3 years. These institutions are very, very sophisticated. And so if you have one cloud provider where you have, let's say, payment system across 5 major banks in 5 or 6 countries, then you potentially have spillover effects. So in the worst case, you could think of the Lehman Brothers scenario in 2008, where, the problem here is you don't know what's happening and who's impacted. But that concern is a systemic risk concern that regulators have. And that's not relevant to any single institution. It's what their responsibility is to look at the security of the entire financial system.
Do you think that this risk that people are perceiving in looking at cloud-based systems, and certainly the third-party risk, because you're putting your hands in somebody you don't control directly, you're a consumer of their services, is turning a lot of financial services companies away from cloud?
I think for smaller firms, potentially, yes. I think the other aspect is it's forcing them to simplify, how many third-party providers they have, which I think overall is very beneficial. And, one of the biggest dangers of institutions moving to the cloud is doing a lift and shift, right? You take something that was nicely set for an on-premise, old legacy architecture and say, I want to move it to the cloud. That's, as all of us know, that's a disaster usually in most cases. And so the ability of taking legacy systems where you have a lot of debt, most banks probably spend anywhere from 50 to 80% of their overall IT budget, ensuring that all their systems stay run properly, run efficiently, et cetera, et cetera. That's a huge cost of sort of maintaining and keeping the lights on in the institution. And as they modernize and move those into a cloud environment, there is substantial simplification in many cases, automation, more agility, innovation that comes across, more capabilities. So the savings that you get from eliminating some of the legacy platforms and then achieving enhanced capabilities in terms of serving customers, delivering new products, that saving really transforms the ability of the bank to become more competitive, more profitable. But I think the complexity around third-party risk management, and in Europe we have the DORA regulation, the Digital Operation Resiliency Act, and that complexity is what's driving a lot of sort of consideration of how many vendors does the institution ideally can manage and how many do they actually need. So I think long-term, that's actually a good thing because they're going to be a lot more focused and prescriptive and manage this third-party risk in a much more effective manner.
Now, one of the things that it kind of strikes me is, look, over the last 10 years, there haven't been a ton of cloud outages, but they do occur. And certainly when they do occur, we hear about them. I get calls from reporters when they happen. So how do financial service institutions, financial services in general, kind of manage SLAs? What are some of the best practices that are emerging, and how does it relate into risk mitigation?
Yeah, so I think it's even with the regulators, they take a risk-adjusted view. So if you have applications that are not mission critical to the bank, in other words, it won't bring the bank down or cause significant financial loss, the SLA requirements outside of maybe not serving customers effectively if a system is down, that is not as concerned from a regulatory perspective. Now, the bank might view a particular customer segment, say wealth management, or an insurer might view being down for a day as a catastrophic event from its reputational standpoint. But if it's not a mission critical thing, it's probably less need to build a lot of resiliency and redundancies. When they're missing mission critical applications, and this has always been the case for the financial services sector, this is not new. What's new now is that they might be in very different platforms. And so moving from a particular cloud and moving back on-prem or moving from one cloud to another, that's a different situation that there's not 10, 15, 20 years of experience. And so the SLAs for those, the regulators are starting to look at those requirements. There's nothing yet firmly explicit as far as I see in this. I think the institutions themselves clearly understand what they need from an SLA perspective. And I think overall we'll have probably a fairly consistent level globally, from folks like the Bank of International Settlements and the various central banks, in terms of what are the points that are mission critical, highly risk, where you have to have lots of agility, portability, or exit strategies, as they like to use the term. And then others which are really managed by the institution, much lower risk. And that's something the regulator is not nearly as concerned about. But the exit strategy piece is sort of the piece around the DORA regulation, which is, I like to use the word portability, but it's the ability of keeping your options open. So from my viewpoint, if you had all of your applications in one cloud that was in a public cloud, I don't think personally that's necessarily always a problem. If you have the ability of migrating or running those in some other platform without, massive issues, because then you've kept your options of running anywhere open versus being locked into one cloud. Now, once you lock yourself into one platform, it doesn't even have to be a cloud, then the portability, is not there, and it can be timely, expensive, and very harmful, potentially even to the financial system overall, of having that kind of lock-in effect.
So if the objective is flexibility, resilience, compliance, all these sorts of things that FSIs need to get to in leveraging technology to its most optimal state, what are the steps to success? What do I need to do to make sure that I get to something that's going to be hugely flexible, resilient, and also maintain compliance?
Yeah, I think there's sort of three key areas. This again is what all financial services institutions do and regulators expect from them is they really need to carefully look at their entire IT landscape, right? They need to understand what areas are critical, what areas are potentially failure points, and they do this constantly in terms of evaluations, and to have agility. And they need the agility not just to ensure that they can meet regulatory requirements, but they need the agility to continually adapt and innovate. The one promise of cloud computing is the ability to accelerate and simplify your ability to innovate in terms of bringing new technology. We see a lot in the AI space, right? It's the foundational models are hugely impactful potentially. But that ability of being very agile and flexible, that's the goal of a lot of these activities. But to do that, it's not just about modernizing your technology. You also have to upscale your expertise and your people. And it's a cultural change as well. It's a different way of working. And that is usually, from what our experience is, probably the biggest challenge in terms of becoming successful in your modernization or cloud transformation journey. And then the understanding of what are the foundational elements to success. You, like anything you do, you have to lay a solid foundation of technology, people, systems, et cetera, in place. And then you start accelerating, as you start to modernize legacy applications into a more modern architecture and gain all those benefits. But you need to do that in a phased stepped approach.
Now, one of the things that I always joke about is that I should have got a psychology degree, not a computer science degree. And you kind of hit on this in, steps to success. Drill in a bit on people and culture. How do I make the changes there to ensure success or get closer to ensuring success, I guess is probably a better approach.
Yeah, and I see this across many different types of institutions, also different regions. There's cultural differences across regions, also sophistication of the technology that's available in regions. And I think it's really about getting people to understand, what is the goal of why you're going from A to Z. right? And the outcome of that goal is new capabilities, new benefits that the institution wants to be able to provide to its customers, to serve its customers better. The end goal, obviously, is to be a more competitive, more profitable, hopefully a simpler run institution as well. But to do that, there needs to be a significant investment in the people. And it's obviously you can hire consultants and they have tremendous amount of expertise and experience in doing this, which is why we have these, global system integrators that have massive teams of highly skilled, highly experienced people. But it's also the staff within that needs to be upskilled and educated. And this is where I'm biased because I come from Red Hat. We strongly believe sort of an open culture, a very transparent culture is what helps facilitate that cultural change, that sort of business change, business model change, technology change. Because when it's an open environment where people are sharing freely, they're collaborating together as much as they can, we try to eliminate silos as much as we can. That is the secret, ultimately, from our perspective, of really being able to enhance what everyone's doing in terms of trying to get the institution to change its overall focus and culture. But it's this notion of being as open and transparent and collaborative. Those are some of the secret sauces of really driving a completely different culture within an institution.
Yeah, I think it's key. I think you just kind of hit the nail on the head. I think financial institutions, having worked with those companies for a long period of time, they used to be very autocratic and then very structured, very bureaucratic in how people worked. Everybody kind of worked in their silo. They didn't normally step out of it. Now you look at them, very flat organizations, very informal communication channels. Certainly they're widely distributed. The pandemic did that. It kind of blew everybody back all over the country and certainly working out of their homes. And I think those institutions are the ones that are taking their business to the next level when those who remained autocratic aren't going to be as moving as fast. So where can we learn more about this? Where do you go to learn more about financial institutions, the ability to patterns of leveraging technology and some of the best practices that are emerging right now?
Yeah, so I encourage, I'm an academic by training, so I encourage people to look at many sources, right? So, most institutions, they have, very, very sophisticated partners, whether they're technology partners or they're consulting partners or system integrators. There's a great amount of knowledge and wealth from those kinds of sources. You also have new generations coming out of, schools on the academic side. They're learning the latest technology, the latest architecture, the latest skill sets. I think that is also, the younger generation that you're hiring. But I think the most important part, and this is what we really leverage in Red Hat and many companies do, is about self-learning. It's about getting the individuals to want to accelerate and learn as much as they can and dive into the latest technology, because that's exciting for the individuals themselves. And it automatically translates into new ideas, new innovations, new approaches within an institution, even if it's somewhat of an autocratic one. But I think that it's all about the individual being and their ability to sort of have curiosity and learn from a range of sources. So now that's my academic bias and also Red Hat bias, but I really see the more that we can get humans to adapt and leverage tools, but to explore and want to go at the cutting edge where their roles allow, that really is where we get innovation and flexibility and success.
So where can our listeners follow you out there? And also where can they find more information about Red Hat?
We obviously have a very sizable website. If you're in financial services, please, I'm happy to talk to anyone and everyone. And we do provide, a lot of publications and other capabilities. We have a very, very large partner ecosystem that use our technology to deliver, innovative products to all kinds of industries and customers, including financial services. So there are a lot of ways of getting into, the open source world. The Linux Foundation, I'll put a plug for the Linux Foundation. It has over 1 million projects that it runs. It is an incredible source of looking at what can be done in a global community about innovating all kinds of aspects. So the community aspect, which is what open source is a wonderful source. And there are lots of people that you can tap into, lots of communities. You can learn that way. You can contribute that way, which is really what it's all about.
Let me tell you, I think it's smart for companies like Red Hat and other companies as well to keep talent like Richard around, because you have to have not only an understanding of the technology, but a deep understanding of how you're making the technology work in a specific industry. And these industry-specific services and patterns are going to be more important as we move forward. You can't look at the stuff in a horizontal way anymore. It's not one size fits all, but the ability to kind of leverage different industries with different solutions and different emerging best practices. So I think this is absolutely a great conversation. So if you enjoyed this podcast, make sure to like us, rate us, and subscribe. You can also check out our past episodes, including those hosted by my good friend Mike Cavas. Find out more at DeloitteCloudPodcast.com, all one word. If you'd like to contact me directly, you can email me at dlinthicum, LINTHICUM, at Deloitte.com. So until next time, best of luck with your cloud journey. Everybody stay safe. Cheers.
Thank you for listening to On Cloud for Cloud Professionals with David Linthicum. Connect with David on Twitter and LinkedIn. And visit the Deloitte on Cloud blog at Deloitte.com/US/Deloitte-on-cloud-blog. Be sure to rate and review the show on your favorite podcast app. This podcast is produced by Deloitte. The views and opinions expressed by podcast speakers and guests are solely their own and do not reflect the opinions of Deloitte. This podcast provides general information only and is not intended to constitute advice or services of any kind. For additional information about Deloitte, go to Deloitte.com/about.